The PSE index has continued to bounce back from 5,800 last week. It bounced back from 5,900. Is this a buy the dip level? And is the worst over? Let's discuss. My name is Den Slim, and welcome to another episode of Monday Market Out. So let me share with you some of my notes from last week. The index, while it closed in the green last week, if you look at the bigger picture, is actually one of the worst performers in the Asia Pacific region, one of only 3 laggards. So if we look at the year-to-date charts, the PSEI is actually one of the worst performing or the worst performing market in the region alongside Thailand and the Malaysian markets. As such, our valuations are now at 9.4 times PE versus an average of 17.5x. And while earnings, see here, earnings have continued to grow over the past years. No, the market simply refuses to price in this growth, and it is really mainly about the political climate here in the Philippines. Valuations are now trading at 2 standard deviations below its 10-year mean. It's a deep re-rating versus history because we used to have a premium among our Southeast Asian neighbors, and that premium has largely disappeared. So the PE ratio of the Philippine market has effectively halved compared to our Southeast Asian neighbors. But on the flip side, this now presents attractive entry yields, meaning this is really a great time to be a dividend investors, as our yields have become very attractive compared to the 10-year risk-free rate, with the spread favoring equities for income strategies. And of course, political risk remains. So the index closed the week rebounding from Tuesday lows in the positive. We are actually up 1.11, 1.2% last week after hitting 5,900. Meanwhile, the dollar remained strong last week but pulled back on Friday for the peso to strengthen to 57.85. Even with the dollar index faltering in recent weeks, the peso has suffered from heightened political risk from corruption cases. So such is the situation we face ourselves. Now, we've been saying that the market is cheap for God knows how long. I mean, 1 year, 2 years, and the market still keeps going down, right? So this is what it really means when we say the markets can stay irrational longer than you can stay solvent. How long is this going to last, right? And believe me, it can last for a long time. Now, meanwhile, new details from the Maynilad IPO. Price was lowered to 15 pesos per share from 20 pesos, effectively reducing the deal size to just 34.33 billion. So, I guess management woke up to the realities of the situation. If the market is trading at 2 standard deviations below its historical mean, you're not exactly in a position to fairly value, I would say, your company. But this should be good news for investors, as we will probably get yields of up to 6% at this price level. But we will see how the market likes it when it lists in November. So talks about Maynilad entering the index, premature, right? Because it needs a minimum of 6 months listed for possible early inclusion. So next February is out of the table. Its earliest possible inclusion, if it does, is in August, and the VWAP requirement really is 17 pesos. But with 15 pesos right now, we'll see again. If the market likes it, it can push the price up to the 17 peso level, and then we will see if it is a candidate for index inclusion. For 2027, though, the market could be a totally different landscape by then, right? So let's look at the charts. The PSEI rebounded from 5,900 on Mark on close and had a 3-day rally. So that is great for the markets. What are we looking for now? So the PSEI is in a resistance area. We have your 20-day EMA and we have this horizontal resistance line. So best case scenario, we pull back We go up, it will meet resistance somewhere here, retest, go up again for the next resistance level. So this is the best case scenario for the PSEI. Worst case, we hit resistance here and then boom. Worst case scenario, we are still on track for 5,838, but it looks like we could just consolidate. First, consolidate, breakout, and do something like that. So we'll see what happens, right? Unlikely, but who knows? Maybe we could do this. Boom, right? Inverted head and shoulders dish would be very bullish for the PSEI and would signal a clear reversal of the downtrend line here. So watch out for these patterns in the coming days and weeks. So let's look at some select stocks. We have Ayala Corp. Ayala Corp fell down to 480 as expected. So is it a good time to buy? Again, not yet. It fell to critical levels, bounce down, bounce down, bounce. Chances are it might actually go down. If it breaches 480, we are looking at supports here at 450 and 440. So still a long ways to go for Ayala Corp. Again, what are we looking for? We are looking for like something like a double bottom, then a retest here, and then we can enter if this happens. Maybe it can do better. Maybe it can do 1, 2, 3. Again, inverse head and shoulders pattern. So look at these reversal patterns for AC, but right now, not yet. SM looks like it can form. Again, what we mentioned before, it can form what looks like here a head and shoulders pattern, but so far SM not looking good. This might actually be a bearish engulfing candle. We'll see. Maybe 724 is still possible for SM. So conglomerates generally doing well. DMC, GT Cap, all bouncing back strongly except for SM. So looking at the property space, we have Ayala Land. I think Ayala Land is in a very interesting level here. Look at the uptrend line. A very strong support level for Ayala Land. It has bounced off this trend line 1, 2, 3 times already. Could there be a fourth time? We will see. While it has broken down the moving averages here, we can expect at least a technical bounce along this area. Possible swing trade here if we enter around this level here, and then we can set a stop loss at around 22, 23.50, and then we have the resistance here of the moving averages, which could give us a 3:1 risk reward ratio possibility. You can even set the stop loss lower if you want, maybe around 23.45. Again, 2.93 risk reward ratio possibility for a swing trade for Ayala Land, just the technical bounce. So we'll see what happens there. SMPH not in a good place, could be headed towards 2180. Let's see what happens. RLC in the same situation as Ayala Land, trend line support here, but it can go down to the 100 or the even 200-day EMA, which would be basically a break in structure. So we will see what happens there. But Mega World already, look at that break in structure here, forming a lower low and a lower high. So one can actually cut some positions off of Meg and just pick it up at lower levels, probably here at 1.87. So let's look at the banks. BDO rebounding from the lows here, could be a double bottom. Let's see what happens. Again, let us start looking for these reversal patterns. BDO not yet complete. BPI holding steady here, higher low, right? So we are now looking for the next higher high, not there yet, struggling along this consolidation area. Metrobank, we haven't seen the higher high yet. Consolidation. Of course, if it breaks out, we could probably see Metrobank consolidating again along this area. So no reversal patterns yet. So far, the banks are holding steady along these levels. ICT has actually overtaken SM as the index heavyweight, number one index heavyweight, and basically the index climbed off the back of ICT up 5.35%. It is on its way to 532, but it has to overcome the resistance here at 512 where we previously had trouble breaching. So we'll see what happens. Some interesting movement along the consumer space. Jollibee back into our buy zone 211, bouncing off of that, hitting the 50-day EMA. Looks good so far, but we'll see what happens because it went up already and then it went to the same level, but could be a long term double bottom or even a triple bottom for JFC. Again, 212 proving to be a good buy point. Congratulations if you had the courage, no, to do this. Again, the technicals held true for JFC. Monde, same situation. It has held this level here, but again, if we look at structure here, lower highs, lower lows, which we have not seen before. We've seen consolidations, but not this clear pattern of going down. So the risk here is that this hits resistance, goes down for a lower low, up low. We could see this pattern continuing for Monde, and that's the risk, but we'll see what happens. Now, the best case scenario for Monde is to break this resistance, retest, and then rally back, which would effectively put the structure as an inverse head and shoulders and a clear reversal pattern for Monde. Now, lastly, we have Aboitiz Power. Aboitiz Power has dipped to the 100-day EMA. This was a good buy point previously, so could be a good buy for Aboitiz Power. Let's see what happens, right? So we are in a buy zone here for Aboitiz Power. Now, lastly, the Konektadong Pinoy bill didn't come out last week, but the telcos rebounded from lows. But, they might not be out of the woods yet. We're still on a holding pattern. Nobody knows what is happening with that IRR. So far, maybe some insider information is available, which is why, Globe and Converge went up by around 2.8%. But looking at the telco landscape here, the Konektadong Pinoy bill is supposed to improve internet connectivity in the country. So if we look at the stats here, we have 142 million cellular mobile connections active, right? We have 118 million Filipinos. 118 million Filipinos versus 142 million connections. How can this be? This means that 122% of the total population has a mobile connection. This means that 22% of Filipinos already have two phone lines. So in terms of the internet space, 97.5 million individuals have internet, just 83.8%. And the problem with internet connection here really is in the far-flung areas where it's harder to install internet facilities. So this paves the way for the likes of Starlink, probably where you can install it in a remote area and you already have the infrastructure to support that. You just think about it. Everybody already has a cell phone. Some of us have two lines. How's this new telco going to penetrate the market that already has cell phones? It's already so saturated. The only way to do that is with a price war. I'm just going to price my service lower than everybody else so they can switch. So it has become a zero-sum game, and this is why the telco industry is where it is right now. It does present good yields. Business for these telcos are still steady, and we still don't know what the effect of the IRR will be. So just a hold on telcos. Be a bit cautious on that, but we'll see what happens, right? So let's look at gold, right? Gold has surged to record highs last week, and if we look at the call and put volumes here, it's starting to show some massive speculation on the precious metal. And if we base it on previous instances where speculation runs high, we can probably expect a certain level of volatility pretty soon. So what's happening is investors are hedging on gold against the possible macroeconomic uncertainties. And what's bizarre here really is that gold is a defensive asset, and a lot of investors are starting to treat it like a growth asset. So there's just a lot of leverage right now, which can be quite dangerous. Now, gold's little brother silver is also benefiting from this backdrop with its own 66.7 rally. It hasn't had a meaningful pullback now. So this trend here, this setup, has historically delivered an average gain of more than 70% over the following years. So the persistence of strength in silver also means that investors are increasingly moving funds away from equities and into hard assets. Now, the current silver trajectory also closely mirrors the explosive rally seen after gold breaks out. So this reinforces the potential of an acceleration, right, towards around 80 to 90 range in the next 12 to 18 months. Again, the fear really here is that if funds are going away from equities to hard assets, why is the market still going up? The Buffett indicator already showing US equities at 217% of GDP. So the US market's already 2 standard deviations higher than where it should be. There's a disconnect in the markets right now. So the irrational markets can actually last a long time. Now, we mentioned before that, the Philippines has remained undervalued, and we've been saying it's undervalued for a long time. I mean, the US, same case, it can remain overvalued for a long time. So while there are indicators that the US market may be in for a correction soon, this irrationality can actually persist for quite a long time. And case in point, the government shutdown didn't even affect the markets that much. And even the negative ADP employment change, the consensus is 50,000. Numbers came in at negative 32,000. No numbers on employment figures because of the government shutdown. And yet, the market still managed to climb up before it sold off. And even if we look at historical performances, especially in the past 4 times that the government has shut down, the last time was 7 years ago. The same president here, the markets actually ended trending up 10.3%. So again, irrational markets, guys. So this could persist for quite some time. But again, sometimes we use these irrational markets to buy into some bargains, right? So that's it for this week. Please like this video if you found the information useful. Please subscribe for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.